This is your Wall Street wake-up call. Global stocks falling as the Bank of Japan keeps rates unchanged. For more, I'm joined now by Ian Weiner, head of equity trading at Wedbush Securities in Los Angeles. So Ian, rates unchanged at minus 0.1%, no additional stimulus. The yen surging to a nearly two-year high against the dollar. What's behind the decision here?
Well, I think the Brexit is the big reason, and I think that they're just trying to wait and see what's going to happen with the vote and save some dry powder in case they decide to actually leave the European Union. I also think that they're starting to realize that their fire for effect, so to speak, is decreasing, and they're having a harder time accomplishing what they're trying to accomplish. And so they're using the Brexit as an excuse to sort of wait and then probably come up with some more stimulus either in the July meeting or earlier.
Well, that's what I wanted to ask you, is if you buy that sort of cover that it's really all about the Brexit, because we've been seeing the yen rally ever since the BOJ pushed rates into negative territory earlier this year. So would more intervention, would more easing have calmed it down?
No, I don't think so. I think actually people would have bought the yen if it actually had sold off on that. I think people continue to view the yen as a safe haven currency, and I think people are convinced that not just the BOJ, but central banks around the world, people have lost confidence in their ability to help steer the economies. And I think the negative rates that you're now seeing in well over 10 trillion of the sovereign bonds, it's a problem. And I think people are just shooting first, so to speak, and asking questions later. And any sort of word on this Brexit, and it appears the leave vote is slightly ahead of the stay vote, is giving people a lot of pause.
And given what we know now about global central banks, the BOJ today, a dovish Fed yesterday, how would you characterize stocks right now?
Well, I mean, I think that stocks, for the same reason that you like stocks, for the last few years, you can use this crazy there is no alternative argument that people use where they just simply look at, the 10-year bond yield, and then they look at the dividend yield or earnings yield on stocks and come up with a scenario where, you have to own stocks because it's the only asset where you can get any return. But I think what's happening now is that people are looking at the economy, and it seems like every day the global economy is getting ratcheted down for growth, and that's outweighing what's happening. And I think people are starting to realize that perhaps the only way to get the economy going is going to be fiscal stimulus. The problem is in many, many countries, including our own, there's enormous partisanship, and it's going to be hard to see a scenario where there's an agreement on how to fiscally stimulate the economy. And in lieu of that, people are looking at the central banks and kind of thinking that they're down to their last bullets.
Yeah, they're down to their last bullets, and we're now hearing reports about possible helicopter money coming soon. Are you a buyer of stocks right now? What's your take on the levels we're seeing in the S&P 500?
I am not a buyer of stocks right now. I'm very concerned about the fact that earnings growth for this year is probably going to be down year over year. I think the 2017 estimates are way too aggressive at up 14% for the S&P. And I think that you're going to continue to see multiple contractions as people get more nervous. And at the end of the day, if you don't get any capital investment, which you're not seeing, if there's a secular change in the job market where wages are going to continue to have an issue growing, you're in a situation where it's just hard to see how you're going to get a lot of GDP growth. And in a bull scenario where you're at 2.5%, I don't see how that supports a 16, 17 multiple on the S&P.
All right, all things we'll be following. Ian Weiner from Wedbush Securities in Los Angeles. Great to see you. Thanks for joining us.
Thanks for having me.
I'm Scott Gamm, and you're watching The Street.